In line with what was widely expected, Seoul's central bank has announced it is keeping its benchmark interest rate steady for the 12th session in a row at 3.5%. Soo-jin reports.
South Korea's central bank has yet again left its benchmark interest rate unchanged at 3.5%. The decision was announced on Thursday following the first Monetary Policy Committee meeting for the second half of the year.
We have decided to maintain a tightened monetary policy as there is still a need to monitor inflation, as well as the impact of rising household debt and the volatile foreign exchange market.
This is the 12th consecutive time that the BOK has decided to freeze the rate. The base rate was last raised in January 2023 to the current 3.5% and has been left steady since then. The rate freeze decision this month comes despite inflation showing signs of easing. South Korea's consumer price index, a key gauge of inflation, rose by 2.4% in June compared to the same month the year before. The rise in consumer prices hovered above 3% at the start of the year before dropping below the 3% mark in April and remaining in the 2% range for 3 consecutive months. And the June figure was the lowest seen in 11 months, inching closer to the target inflation figure of 2%. But ongoing concerns about household debt and the largest ever interest rate gap are deterring the BOK from rate hikes. In June, household loans from 5 major commercial banks in Korea, KB Kookmin, Shinhan, Hana, Uri, and NH-Nonghyup, surged by more than $3.8 billion, the largest on-month rise since July 2021. And the U.S. Central Bank, in its most recent June meeting, decided unanimously to keep key interest rates at that 5.25 to 5.5% range, marking the 7th consecutive meeting where the Fed has kept its interest rates at the same level. This has left the rate gap between the two countries at its highest ever at 2 percentage points, raising concerns that the South Korean won could continue to weaken against the greenback. While the U.S. Central Bank's policymakers and projections released by the Fed last month were split over how many rate cuts there will be this year, most expected there to be 1 or 2 rate cuts amid the U.S. making moderate progress towards its target 2% inflation and the labor market cooling. As it's unlikely that the BOK will cut interest rates ahead of the United States, Korea's central bank is expected to ease its monetary policies only once in October this year, after the Fed's possible rate cut in September. Soo-jin, Arirang News.